good morning, good afternoon to everybody on the call. My name is John Wilton. I am a director here at the Global Institute of Credit Professionals. We're joined today by Ed James. Ed, over to you for a brief intro.
Hi, John. Looking forward to having a chat about careers and particularly within private credit. I'm the founding director of RCQ, focused on credit headhunting for 20 years, which someone said to me that makes me technically a veteran. Although, I set up RCQ in 2015. I've got a team of 10 under me, half focused on EMEA hiring and half focused on US and broadly North American hiring. Solely on credit, which I think is a good reason for us to be chatting today.
Perfect. Thanks, Ed. So yeah, I mean the official title for this session is navigating private credit careers from market entry to specialization. I think this has been touched on briefly in one of the previous sessions, but might bear repeating to an extent. So I think private credit is quite a broad church. And if you spoke to people maybe 5, 10 years ago, the immediate answer you get about what you're covering is direct lending. But in reality, it's quite a lot broader than that. So, within the sort of sub sectors of that, it'd be great to get your understanding, or I'm happy to chime in on, where we see the key points there, but also whether you have any specializations as a recruiter when it comes to strategies.
Yeah, it's been a huge growth area, and
Yeah,
I mean, I'd always sort of describe myself as a credit focused headhunter, but I think kind of the private credit ecosystem it's just seen huge growth. We can even see this just in the media for it's just sort of picking up uh mainstream media yesterday and just seeing what people are saying. It's very much entered more easily sort of high level talk that people are
yeah,
familiar with. There's definitely been that shift away from public to private. It's a great career to have for people I think who are looking into it, and it's a great career to be in within that. And as you said, like private credit, what is it? I mean, that's the $1 million question, which I think neither you or I can really fully answer. But for us, we see that across, of course, the sort of traditional sort of direct lending, but structured finance, that's been a huge, and specialty lending, specialty
yeah,
finance, which has been a huge growth area. Fund finance, which again, like I went to sort of one of the Fund Finance Association conference, and the number of people that have been in fund finance 3 years versus, or have joined in the last 3 years versus
yeah,
like 5 years plus, it's crazy. And they've come from all sorts of different backgrounds, which we can probably touch on in a bit. To sort of special sits, alternative credit. Everyone has different words for it, but from a hiring perspective, it's just definitely been an area that's been in demand for talent, and that's across the sort of spectrum. And yeah, people obviously want to get into it and have built like really good, fantastic careers, which has been driven by an imbalance of more roles
yeah,
coming up and less people who have got years' experience in there.
yeah, yeah. Um, I mean, maybe you've hinted at it a little bit there. Before we dive into things, I think what would be really useful is if we could get a sort of an idea of the state of play at the moment. So, you know, how maybe the dynamics in private credit hiring have shifted over the last year or 24 months. Um, Maybe from the perspective of, are there particular strategies that have had a lot of attention? Is there any comp pressure or any geographies maybe that have been particularly hot for you?
Yeah, I mean, first of all, comp pressure. There's been comp pressure upwards, full stop across for everyone. So
Yeah,
that's been good for people up there. But in terms of what strategies have had most attention, um, I mean, the sort of ABF area has been huge. We've seen sort of huge growth in that side of things, um, and then kind of fund finance, and particularly where you've got the intersection of structured finance and fund finance. That's been a huge growth. Geographically, I think it's. I mean, I can probably talk less so from an Asian perspective, but like there's a huge demand for talent for US talent in the US for qualified people in this area.
Mm.
We've seen a number of new shops setting up with ABF strategies. We've seen a number of we did sort of some we do some people move monitoring and that side of things. And for example, Blackstone, they've been hiring huge teams from starting from relatively small. I think the mega funds they've been huge hoarders of talent, if I can say that.
Yeah,
They've been sort of gobbling talent up. But it's all about finding the right talent. I think we'll probably touch on it in a bit, basically about what right talent looks like. But it's not easy for firms to get what they want. Everyone
yeah,
wants perfection. Everyone wants a 10 out of 10. And so finally on the geographical sort of point, I mean, I think kind of London and New York are probably the two eco centres, the two sort of financial centres that you'd see sort of the most amount of the roles. But
mm,
you'd see private credit roles. I mean, they're kind of like it's a pretty global sort of market. People might invest in different geographies, but you'll see people all over the place. Just the market in New York is definitely the most mature, then followed by London, and then various other sort of
yeah.
financial hubs there.
Maybe not the mass talent exodus that I think that people worried about a few years ago, people rushing to Frankfurt or Paris after Brexit. Then,
Yeah, well, I think it's like that's the nature of the private versus sort of public. I think by nature, it's like even if you look at one of the rating agencies of the deals they're doing, like by nature of public transactions, a lot of the time you're not necessarily publicizing it that much. And with MFS as well, it's like we see some, like it's definitely come into the more sort of public parlance, basically with
yeah.
where private credit's been.
I mean, you talked about Blackstone, maybe a hoarding of talent to an extent. Um, what are the common sort of entry routes if we look at backgrounds of people moving into private credit? Are there any themes in terms of where they might be working from, where they're coming from?
Yeah, good question. I think we see people coming from all sorts of different backgrounds, and actually, that's partly by nature of the fact that private credit there's such a breadth of roles. There's such a breadth of entities who work in private credit. I guess you've got kind of buy or sell sides, you've got legal ratings, so on and so forth, advisory. But like the asset classes, there's definitely some sort of crossover, but there's a lot of diversity within it because like would you see a direct lending person going into structured finance or fund finance? I think, yes, we saw a plethora of people getting into fund finance, potentially from Levfin and direct lending um, over the past few years. But I think the market now has become a little bit more mature where actually you can look for people within that asset class because it is there.
Yep.
And I'm probably not qualified enough to say what the next sort of sub private credit asset class is, but I'd suggest to think that it still sort of remains a sort of growing area really, and I see sort of where people are, and then back onto the sort of direct question, sort of where we're seeing people. I mean, like we'll see people from like that you see some more juniors from sort of big four, you see
Mm,
some people from broader sort of DCM. If people are at a big bank, you see a lot of movement within that, and some of the time these funds have got big alternative credit funds, which would be or private credit funds, which can invest in loads of different asset classes. And you'll see people actually within their own role investing in all sorts of direct areas where they've been at, basically. So you'll see everyone will go through their career slightly different. There's no sort of perfect way. But the key skills and traits people would look for is good, strong credit fundamentals, ability to sort of understand transactions and particularly some of the more complex transactions. Um, the ability to sort of underwrite or reading a balance sheet and then just being really good communicators.
Yeah,
All those sort of things. Yeah.
yeah. I think we see that from the perspective of the GICP. It's all very well having a fundamental skill set in credit analysis, but the things that seem to come up a lot are an ability to think critically, have a curious mindset, and to a certain extent the rest of it can kind of fall into place. It's great to have a background in modelling, etc. But the people we seem to see getting ahead are better rounded. But my takeaway from that is banking, Big Four, credit research, sort of classic finishing schools. Is that accurate?
Yeah, I think having a good brand name or a good manager, one of the
Yep.
two of them, is good. So being a place you can kind of feel like you can learn, develop, um, that is definitely important. And like I think kind of don't stress too much about the route you take or are taking.
Mm.
I think my advice for people is generally always try and think about these sort of things, but careers often happen organically, and it might be that someone leaves and it presents an opportunity for you internally. It might be that you're contacted about the right time for the right job or see the right job at the right time. So, but I think kind of trying to sort of make sure you're thinking, where do I want to be and what do I need to do to get to sort of where I want to be. I think that is good and important, and that can have many different strands. And I think being able to have a good network through training internally, externally, going to conferences, going to events,
Yeah,
I think I really would highlight that, because I worry about some of the newer generation
yeah,
being a bit more comfortable with working from home and less focusing on that network bit. I remember being an intern at Morgan Stanley. Point to get across, I think, for anyone building their career,
yeah.
you see things. It's just really helpful throughout your career, and you'll benefit from that throughout your career.
I mean, so if we, I unfortunately, I don't think I could see the sort of make-up people on the call, but I'm assuming that some people here might be thinking, I'm not from a bulge bracket bank in a DCM team, or I don't work for PwC. If you've got somebody with a less traditional background, what's the best way that they can frame their experience if they're looking to move into the private credit space?
Yeah, without saying everyone takes their own different routes, I think the routes that are good to take. So, like the fact that you're on here with GICP, hopefully that means you're interested in training and being able to have something on your CV or LinkedIn profile that you can say, I've got this, I've done this, I'm making my inroads into that.
Yeah,
That's a really good starter point. If you're looking to get into that, if you're thinking about like credit fundamentals and being able to understand that, I think just trying to trying to sort of understand just the makeup of credit analysis and how credit works. There is no substitute for hands-on work experience.
yeah,
So an employer or interviews are always going to look at like, what have you been doing? What's transferable? If you're in a mature market like London or New York, where people can get almost exactly what they want, someone doing something similar, it's a little bit more harder to make those sort of steps when it's externally.
yeah,
Definitely try and push for internal mobility, because I think, I see a lot of people, whether internally, where they've started in one area and moved around. And again, it kind of goes back to the networking. If you're
yeah,
visible within the company, then that's good. And obviously, if you can't find something and you've got that strategic plan of where you want to be, you want to work out how you can make that happen.
yeah. Thank you. I was actually at a funds careers fair this morning and had exactly the same conversation with somebody about they were thinking they're in a middle office role, want to move forwards, and we're saying, okay, well, how can we approach this? And 15-minute chat was essentially the same thing of, this is most likely to happen internally. And then you've got already got the brand, but then you can get the experience without necessarily having to shop around and potentially spend a lot of time interviewing against competition, which in London is incredibly stiff, right?
Yeah.
Um, as we're going through this, I've just seen I've seen one question pop into the chat, which is a great reminder for me to to let everyone know. We've set some time aside at the end for a Q&A. So to the person who's already submitted one, thank you. We will get to you. For everybody else, as Ed and I are speaking, do feel free to put some more in, and we'll address those. So I think we've had a bit of a think about backgrounds in terms of skill set or deal experience that might translate the best into private credit. I think we've got some potential examples in underwriting, maybe some exposure to restructurings, possibly you're in the workout team of a bank, for instance, or maybe sponsor coverage. Are there any themes that you see maybe from employers putting onto people specs, for instance? Key skills that just always come up that translate really well into a private credit career.
Yeah, what do I see on job descriptions that are kind of common? So, I mean, a good academic background and proven continual progression throughout your career, and that can be promotions, but that can be training and development, that side of things. Quantitative skills, so like
Yeah,
financial modeling, that's definitely there. So the ability to sort of really be able to use large data sets. I was having a chat with my team this morning and in advance of this and just kind of sort of brainstorm. And actually, we came out with two or three examples of people we'd spoken to in the last couple of weeks where people had put sort of some financial models together with AI
yep.
but hadn't data checked these sort of things before as well. So,
Yeah,
so I think it's kind of like common sense. It's a good skill to have, but like, how can you quantify that and show that? I think just kind of like examples of where you're AI literate, but can really think about things, and also, and I think this has been throughout my career where I've seen things, people who are highly analytical, who have the capability to pick up technical concepts
yep,
and can communicate with others. That combination is really valuable. That combination is never going to go away. And if you are only technically competent but not great communicator, just
yeah,
really need to try and build on that communication skills. And if you're a really good communicator and not technically competent, within private credit, certainly, you just want to, yeah, it's so many employers, especially in the US, this is a lovely US phrase. They're like, we want an athlete, we want someone who's an all-rounder, and we want someone who can kind of do everything.
yeah,
So yeah, and a good team player, all that sort of side of things.
yeah.
But yes.
I mean, I think that's also where mentoring can play a big part, right? Because I think naturally it's relatively, or not relatively easy, but it's a bit more common to focus on the technical end of things at the start of your career, and eventually that role will morph into a more sales focused role. But having a senior there, a senior sponsor who's walked the walk and can bring you into those environments, I think is really helpful. What's your view on the mentoring side of things?
Yeah, I think be proactive, make things happen. So some of the time you have mentors that are almost presented to you, and mentors, sponsors, and advocates can be different types of people. And probably put these like mentors for me, I think should be actually almost someone who's like a little bit removed from your immediate role and
Yeah,
team,
yeah,
who can kind of like help you think about things and think strategically and bigger picture. A sponsor and advocate, if you're getting towards that sort of side of things, is someone who's senior within the business, who can really sort of sponsor you as you look to raise or rise your career within a business, and within an industry as well. Like you look at direct lending and fund finance and structured finance. These fields are quite incestuous, and
yeah,
it's important to have people that within the industry sector. If you get an opportunity to go to events, just take it. I know you're going to be really busy, you're going to have so many things going on, and different things. Just trying to say, okay, whatever. The most basic thing is let's connect on LinkedIn, but trying to sort of find people like, will you be my mentor? Will you, like, and a mentor doesn't have to really require too much time. It could be just
Mm,
like have a coffee once every 6 or 12 months. Like I'm looking for a senior leader internally or externally, and these things don't always come to you. If you try and make it happen and you
yeah,
ask, so many senior people are really happy to give back. And, like, just putting yourself in a position to get that as well. I think that
yeah.
I've seen so many people talk about those things about being really valuable.
Yeah, and I think the other point that I've seen is making it as easy as possible for the mentor. Essentially planning out what it might look like and giving them a a bit of a workbook of how this might work, how this might look. Seems to be a really good way of kicking things off because it's a little bit more concrete. Even if you get a 6 month commitment, if you've laid it out properly, it's probably a much easier conversation than this kind of nebulous concept of mentorship, which might, in that person's head last for a decade. Um,
Yeah, and you can have, I mean, and these things they can take whatever format you want, and it can be formal, it can be structured, it can be not structured. And I think a lot of senior people don't necessarily expect, like a lot of people have had advice and help as they've gone forward, and I think a lot of people will, especially in a small incestuous market. And I think if you're a junior looking to get like above this sort of side of things, like what you could potentially even offer a senior level individual is actually, like if you're an AI literate junior, you can try and
yeah,
help with that side of things and actually say that,
yeah,
like it's quid pro quo, like we can help each other out. And actually I can help you with that, and just providing introductions. And if you don't have a mentor, sponsor, and advocate within private credit, I, I think kind of how you would go about getting this is really like there are events that you can find and try and get to. Just do try and get to that side of things. If there's a conference networking app, try and message a few people and just say it'd be
yeah,
great to have a chat. I'm looking to be humble about it. I'm looking to make my way throughout my career. Yeah, hopefully that's kind of helpful.
yeah. Um, just checking the time to make sure we're not going to overrun. um, One thing I think we've both kind of mentioned this in passing. Have you seen a significant impact on AI affecting hiring trends, or even affecting, how firms are assessing their candidates through interview processes?
Um, yes, in so many different ways. I'll try and do it as
Hopefully
clearly,
not just through
concisely.
building models that don't quite match up.
Yeah, yeah, it's like it's the age old. It's like you can write a poem or a song or a story, and it's like like is it actually really you? And you can normally sell some tell some telltale signs. But the sort of less so AI, particularly in the US, we're seeing it mentioned more in job descriptions, probably
Mhm.
less in job descriptions in Europe than the US, but where US leads, Europe often follows. So we'll expect to see that coming, more increased frequency. Um, AI literacy, I think, is quite important, but it means different things to different
Yeah,
people. It's like
yeah,
what does AI really mean, and where does AI sort of start and stop? I think the key thing is it's like however experienced you are within your career, just do take some time out to think, okay, well, actually, how can I do these things and how I can play with things. If you're a company that can help, like, get you on some training schemes with AI, that can be helpful. I think also just like being curious and asking what colleagues, friends, peers have been doing, because just people are often quite happy to share these things. But I think kind of the worst use of AI is obviously just asking
yeah.
questions and
Can
just
can you write this
using.
email for me?
Yeah, yeah, exactly. I
Yeah,
sort of like that you can tell straight away where
yeah,
things are. So just the thing which I said earlier, analytical skills and ability. Just can you have critical thinking? Can you
yeah,
sense check things through? If you're going to be doing a case study for an interview and putting something together, it's like you may well get in-depth questions on certain things, and it will come up really quickly if it's just you've used that basically. And I think it's
Yeah,
fine to say you've used it,
yeah,
because actually people are like it's a powerful tool, and actually we're going to be using it more and more.
yeah,
But it's using it to get the right answer and checking to make sure good attention to
yeah.
detail, making sure you got the right answer.
Yeah, yeah, agreed. I mean, I think I've spoken to corporate banking teams that are using AI actively in their fundamental credit analysis and their decision making. But the thing there is, it's a really potentially efficient way to get from point A to point B, but it has to be underpinned with the same intellectual rigor that you would any other process, and you have to know, roughly what you're expecting out the back end of it. So it can act as a sort
Yeah.
of validation tool and to speed things up. But if you've just got in there without the understanding in the first place,
Yeah.
the the use case is almost nil because you don't know whether it looks right.
Yeah. Well, a specific example, I've got a friend who's a partner at a law firm, and he was like put some answer into sort of ChatGPT and got an answer. And then he was about to send the email with the answer to it, and then thought, actually, let me just double check through it and check on my law Bible. I can't remember the exact phrase, but it's and he was like, no, this is completely wrong, basically. And it's like you know, like those years experience you've got of that side of
Yeah.
things, and just being able to question and think about these things is good.
We've got a few minutes left, so I do want to make sure that we leave time for the Q&A. But as a closer for our conversation, are there any roles that you think are going to be most in demand over the next 12, 24 months?
Yeah, I mean, the sector we're seeing probably most growth in is probably the fund finance, and it could be on the secondary side of things. I think
Mm,
that's definitely seen good, strong sort of growth. I think the key thing is maybe what is less likely to be in demand is junior roles where you're doing work that could easily be offshored,
hmm
or like if your role can be offshored and someone in India, for example, can do exactly what you're doing, but you're being paid major
Yep.
financial
Yep.
center salary. You've got to think about how you can make yourself valuable and indispensable to people. So more than just a modeler. Um, and yeah, I think. I mean, I do worry a little bit about ABF sector in terms of there's obviously been some financial news, and I think everyone's chasing returns, and funds will have target returns, and it's just tough to hit
Yeah.
those returns, especially if some of them are quite punchy. So so my worry is at some point, because firms are struggling, some investors are struggling to deploy and find the investments they make that
Yep.
will meet their return targets. And you just hope that's not a race to the bottom and that side of things. I don't think it has been that yet, but obviously private credit is by nature less regulated.
Yeah.
So would I'm not the best qualified to say this, but I would expect that you'd probably have more scandals or more issues within private credit than you would public credit. But actually, the number of issues you've had in private credit are remarkably small, and it certainly, from all the visibility that I've got and everyone I speak to, that it's only increasing, and the trajectory is rapid in its growth.
Excellent. Thank you. Um, right. I'm going to crack on with some of these questions. We've had a few come through already. So, um, number one, uh, how early should how should early slash mid careers professionals think about timelines for moving? I.e., is staying in a role for under a year acceptable? With the space developing so much, there's often better opportunities that pop up before you can stay in a seat for 1 to 2 years. So I think that's something which we used to sort of face quite a lot when I was in the industry, and I imagine you've got a similar view.
Yeah, I think so. What employers will look for, I think, the ability um, to experience and get up to speed, but it's actually also like being involved in cycles,
Mm,
because like you will know what the cycle of your asset class is basically, and I think. I think, I mean, generally, my take is I think a couple of years in a role or type of role is kind of quite good. Employers do worry about people who are being jumpy, but that would be
Yeah.
more externally within external firms. I think if you're jumpy internally, I don't think an employer is going to look badly upon that necessarily at all. And actually, arguably, you could make a good case for that being, whatever promotions and all that side of things. Um, I think you probably know where your curve is, and I think naturally everyone's curve is going to be at its steepest in the first 3 or 6 months. And it is okay if things do start plateauing. You just want to make sure it's like you can still see that where you'll get in another 6, 12 months. So you've got to make that judgment call. Bigger firms have got more opportunities internally to retain and keep people as well by
Yeah.
nature of where things are.
Yeah. And I think the other part to that is you need to know how you can present this at interview. So if there's a pattern and you've actually had, maybe 3 1-year seats, that's a little bit more suspicious than, I've started my career, I've done 5 years in one place. I've moved for this last year because it looked, this was an exciting opportunity and I'm excited about the next one. That's a little bit, it's a different narrative. So, the other part to think about is this a pattern or is it a one-off because there's something that I can't miss?
Yeah, and I'd absolutely say this there as well. Like, as long as you've not got lots of different moves, absolutely fine. Like, if someone moves into a role and it's not how it turns out to be, or like you've learned everything that you think you can really do in 6, 9, 12 months, that is okay. But if you've had that role and then another role, and then you want to move again, it's just like, is it you or is it like, and also people, if I'm looking at investing my time training on someone, I want to see some sort of return, and I want to probably have someone for a couple of years working under me where I can see the value for me investing my time training that person, developing. It's a bit less relevant if you're more mid-level and you're spending less time training. But being able to show some loyalty is a
Yeah.
good skill and trait. You don't see that in job specs, but you'll hear people talking about it in interview debriefs with me.
Yeah. So we've got a two-parter. I'm not sure if we'll be able to get through all of it in the next couple of minutes, but um, part one of this is uh, I've mainly got experience in credit approval and some origination and transactions uh, in fund finance, and I'm looking to move into fundraising/IR. So essentially, no prior IR experience. What's the best way to land that sort of role?
Okay. So fund finance, focus on that side of things. So you want to make sure if you talk about asset classes and roles, so fund finance, you want to stay in that asset class, fund finance. The fundraising and IR, we are working with on a fund finance IR role, which will, right now at an associate level with one of my teams. So the things that they've been talking about looking for is, client facing experience. So just trying to, like, if you're doing credit approval, more client interaction, the origination bit, trying to sort of leverage a bit more of that, going to conferences. I know I've said that quite a few times already, but just actually being out there, networking and speaking to people. And the more closely you can work towards like fundraising and IR teams, but just generally they'll look for more client facing exposure. So that side of things, and then just understanding the technical nuance of the products and making sure. I mean, fundraising and I, you probably less need the technical bit, but just trying to leverage that client relationship skills that you've got.
And we'll try and squeeze the second part in. How can I overcome not having a big brand behind me? Is it still possible to break through? I think it's definitely possible.
Yeah,
It's about
definitely.
framing your experience correctly.
Yeah, exactly. So I think it's just, yeah, people will focus most on your experience. So if you've done the right role, don't worry too much about the big brand name as well. It's just get the right experience. And if you think strategically about your career,
Yeah.
things will happen,
Uh,
and you're proactive, things will happen.
and one last point I think is always worth saying: make sure your CV makes it clear that you do have that experience, because you have to make sure that that body of text actually supports it and it gets them interested enough to speak to you.
Keywords, making sure it shouts, and you can tailor your CV towards different types of roles. If you're going to fund finance versus direct lending, you just want to make sure it's clear that you've got some mention on there that that's what you want to do or have been doing, and the related key things.
Excellent. We're 1 minute over, so I think I'll take that. Ed, thank you very much for joining us today. It's been a pleasure, and thank you everyone in the audience as well for joining us. We'll see you on the next one.
Thank you so much, everyone.